Ed Morse, Citi Global Head of Commodities, joins us this morning, has warned you about getting too excited about thinking oil will go higher, Ed, and you've been so good about resisting the temptation to think too bullishly. What do you make now that it has filled this post-OPEC cut gap?
Well, we're moving into a different season. We're moving into the month of May, which is traditionally the lowest demand month of the year. But it's also a month when refiners start gearing up for summer driving season. So we think, we're close to what you might call a bottom based on fundamentals. What we're seeing in high-frequency data are inventories beginning to draw after building tremendously. That was kind of the main incentive that OPEC plus countries had in making the announced cuts they had for May. We'll see how much cuts they actually put in the market, but undoubtedly summer is going to be stronger than what we've seen unless the world goes into a recession more quickly. So, one of the things to look for is what the FOMC is actually going to be doing.
Right. And I noticed yesterday the Russian deputy prime minister speaking on behalf of OPEC, I guess, said there's no need to cut more. Do you see that view changing among the cartel?
Well, look, a day before they announced the cut for May, the Saudi oil minister said, we said what we said, we're going to be here to the end of the year. So they're keeping their cards close to themselves. They're acting, once again, like the central banker of oil. We can't anticipate, just because they say they're not going to do something a few days before they meet, that they're not going to do something. And we're really in a month-by-month situation again, as we had been before they said, hey, cut this out. We're going to do things a year at a time or half a year at a time. So I would take it with a grain of salt. We don't really know. On the other hand, what we do know is that we are close to the lowest demand month of the year. And if I were in their shoes, I would wait a bit to see what the next month brings.
There are also some doubts about the recovery in China. I mean, those doubts are playing out, at least in the Chinese stock market in particular. And I'm wondering if that's sort of the part of the oil equation that you're revising lower in terms of demand.
Well, we have to year to date. We had a tremendous month ago. In terms of imports into China, they were close to a record levels. Refinery runs were at a record level. Exports were extremely high. If we look at what we think actual demand was, we think China had to have been building stocks by at least 1 million barrels a day. There's a case to be made it was significantly more than 1 million barrel a day build. So what we're seeing on the import side is reflected on the export side and is not necessarily reflected in a demand surge, at least not year to date.